Okay, I'm going to go ahead and start my live stream. So this is Elliot Wave Sage, and like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. I want to, kind of answer your guys' questions and kind of see where things are. I think that the week coming up, we have a lot of news that's going to hit. So I think the market definitely will get some movement out of this range, either higher or lower, of course. But I think we'll have a pretty big move this week. The week coming up. So where we are with the SPY is pretty simple. Impulse is finished. We're in the two wave. The two wave obviously can continue. I do believe this is the count right now. It could even still be in five, but I think five is over, and we're in the middle of two. You could be looking at a flat correction taking shape. So it looks like maybe early, some of the news next week could be bearish, and then you get this massive reversal maybe at the Fed meeting. So maybe pre-Fed, you get this drop, and then they panic. I don't know, panic's the word, but then they say some things, and then boom, we're out. So I don't know how this will play out. Now, if we do keep pushing higher, then I think it's just an extension of wave 5, and then you still have wave 2 coming. So this whole cycle needs to correct right here. So this is on the forward. So I'm forecasting this pullback. This pullback is due, and again, it could go that deep even. It can, two waves can go all the way back to retest the low. So I don't know. It's unlikely. It's more than likely going to find support at 480, but y'all have to do what's best for you. I think it's highly unlikely that the 2 is finished there. Now, if we could take this high out, again, we have 5 up, 1, 2, 1, 2. So again, it's an extension in 5, unless we erase momentum divergence, and we have a lot of work to do on that. So I don't think that's the case. So I do think it's a 2 wave that we're in. Again, we're burning a lot of RSI, sideways move, so it may not go that deep, like 480 at the most. Let's look at the 4-hour and see. Again, here we have the momentum divergence, and on the 4-hour, it looks like to me we could actually still go a little bit higher and extend in this 5th wave, but you do have that momentum divergence here, so you could even put the 1 here, but I don't like the way to label that 5, so I don't do that. That's why I'd be careful you're not in some kind of flat correction. The triple Qs did have a 3-wave move. It looks like this impulse is already finished, and we're in the first swing down. And if the SPY has more downside, then I'm looking for a bounce and failure here, and we get a bounce, and then we fail, and we come down to this area. Something like this is most likely the path. But more than likely the market, the technology should bounce here a little bit. And then we'll see what this corrective pattern ends up, but we're in a 2 wave. This cycle is over. We're pulling back. And then some people are like, okay, well then C is finished, right? You have 5 waves up, so you have 5 waves up here. C is finished. I think it's too short, too truncated, and we need to have the divergence erased. It looks like on the 4-hour you did do that, so check. The daily you did not. So it shows that the Y leg is not finished yet. If the daily had erased divergence, then there's a chance you can make an argument that tech's ready for its super crash moment and Y is finished short. But more than likely it isn't, and that divergence on the daily will be erased when this 2 wave is finished. Then you'll get this final push to do that. Again, looking at where we are in technology in general in January, flash crash, we did pull back, and now look where we are. We're higher. So January did turn out to be a good month, like I expected, even though we're still got a few more days left traded in the month. But for the most part, we ended up higher. I think February into mid-February, we may be having to deal with this 2 wave, but I do think we're ripe for a reversal And then I do think this looks like it's setting up for the end of February, March, early March timeframe. We should be in this area, in the danger area. This is the danger zone here, the danger zone. So none of these indices are in the danger zone yet, but that is eventually going to happen, and then the market will have to make a decision. Do we get a catastrophe in the market, or do we get Moon Boy? And if we get Moon Boy, we'll just keep pumping and gapping up with unfilled gaps, and the momentum will increase. Moon Boy would be the 2 is done here, and this was a 1-2, 1-2, and we'll just keep going higher. If we start seeing that, then we got to worry, the Moon Boy's in play. But Moon Boy is unlikely, but you need to respect that count because it's still a valid count. Whether you believe in it, you disagree with it, you want to, get angry, even saying Moon Boy. But Moon Boy is a valid count, guys, and you got to understand the market for some reason is bullish. I don't know why it's turning into this kind of melt up count, but it is. It's just that's what's happening underneath the hood of the market. You have stocks like Boeing and Tesla now oversold, and that could be, and the Hang Seng is like showing a reversal, which I warned you about. So all those stocks, the weakest of the weak right now, those 3 are turning. If those turn, those could support the market higher. They won't support it lower. How can you crash if those 3 stocks have already gone as low as they can go? You have shit stocks like airlines pumping. You have Russell about to break out. You have a lot of bullish signs. You have a weak dollar. You have a 10-year that's about to turn down in rates again. All that is bullish. So if you're bearish and you're like, I'm shorting here and I'm so smart and I'm gonna short, I mean, it's a high risk setup for a short. I would not recommend shorting. Buy the dip is the mode we should be in as a trader, and that's what's been paying off this whole little bit here, and that should continue for the time being. So I'll go to your guys' questions, and we'll go to it. And I'm only going to do a couple symbols. That's the rule. So I'll only do the first 2 symbols, and so everyone gets their questions asked. So can we look at Symbiotic? Yes, kind of weak. Symbiotic's been kind of weak, but technically it hasn't failed yet. So to me, I've got 3 waves down. We have a reversal. So clearly this cycle broke on this pump. And so now you have a connector wave for this move, and you have a pivot to trade against at 39.55. It held, and now till next week's the moment of truth on this instrument. If this breaks at 39, at this 39 level here, let's say $39 breaks, you have a connector with a pivot, and then it's going to take another leg down, and it's in a much higher degree correction, and you just have to prepare for that. Is it overall bullish? Yes. Is it going to stay supported? Yes, because it's 5 off the low here. 1, 2, 3, 4, 5. So all that means is this is some kind of A, B, C, and so I would be looking for if 39 breaks, prices to find support at 24.67 as the next area to buy in this area if this pivot breaks. So either you got to have to dollar cost average in, dump it, buy it back later, do whatever's best for you. But right now, this is the count. And if you look, you see these fractals, right? You see how this came down and it back tested the low here, and then look, it essentially went vertical. So this has a tendency to do this type of fractal, right? It comes and back tests and then goes vertical. So maybe we'll see some vertical price action in this next week. I don't know if it's got some news coming out next week that could create that. When's its earnings? May 5th. Maybe it meanders around here, and then on Monday, on the 5th, something really exciting comes out, and bam, this thing can get out of this corrective pattern, which you could call this a cup and handle, and we're in the final, we're making the handle, we break out. This is what we're trying to go for here, but you'll have to do what's best for you on it. and see how it goes. We'll have to see how it goes, but we don't have a technical break yet on Symbiotic. I'll jump to the super chat like I always do. Fabio, thanks for the 5. NDRA. Alrighty, NDRA guys. Let's take a look at that. See if I have it in here. Looks like it's a new one, or one I haven't saved. Yeah, it's a new one. So overall, it's a very bearish instrument, so they must do a lot of dilution, right? So it's clearly the trend is lower. So the trend has been lower, right? So it's just kind of like sell the rips. Now what's interesting is you do have a Fibonacci support level down here at 13 cents. If it were to ever tag that, I would expect a violent reaction higher if that ever happens. But there's no guarantee that it would get to that level, but it's something to keep an eye on. The way the traded is just kind of looking for the last low, and you see this reaction higher. So there's your pivot now at 87 cents. So to me, as long as this 87 cents holds, it's tradable. And if it breaks, then you're likely to go down to the 14-cent level for a violent reaction higher. Now this looks like 5 up to me, but we need to see if we have divergence at the peak. Here that doesn't really give us a good indication. The daily, you don't have divergence. It looks like to me a corrective move off the bottom in an ABC pattern. So this is dangerous to expect it to go higher. Now this could impulse down and get a counter trend rally. Here it looks like it's already into the 2-wave of some kind. Here it looks like you've got you've very hard count to figure out where it is right now. It could be finishing its 5th wave, and then we get a retrace, or it's already done its 5th wave. But more than likely, you've got some kind of 1, 2, 1, 2, 3, 4, 3, 4, 5, and either 5 is done here, and you should get a bigger relief rally, or 5 will continue lower, and then a rally would come later, and then you'll have a meltdown. So it's really a tough count to trade. I think it seems pretty likely that this is going to break, but this is going to create some volatility in this stock. It could either bounce later, something like this, or it already is finished 5, it'll keep bouncing. So one or the other. But once it gets up to like $1.19, $1.20, the wave 4 high, then it's in danger of taking its wave 3 lower. And I do think this would be an area technically that you could see like a violent reaction higher, something crazy, because they'll have technical support finally, and it would be correcting the whole cycle from the beginning, right? It basically would be like when it hit that level, anyone in this that's been short this since 2018 will be taking profit finally. So this, you'll get something like, you'll probably get a candle similar to that. So if I was trading it, if someone's like, I want to trade this, I wouldn't even entertain it. I'd just keep it on my watch list. And if it hits this area down in this area, then I would take a speculative lottery ticket long on it. With the knowledge, no, I could go to 0, but with the reward of a 10-bagger. So you got to do what's best for you on it. And let's just go to the next super chat. Iceman, Icy. Did this wrong, but I was trying to request Lulu. Yeah, Lulu is on my watch list because of its bullish breakout. So let's take a look at Lulu and see how it's doing. So I was looking at this as a connector wave, but it truncated, and now it's forming a new connector, so that'll push the price lower. So I don't like this corrective pattern here. This is too truncated. Now, I can't make the argument the RSI reset was so significant that perhaps it is that bullish, right? Um, and so it definitely truncated here. So it never reached the Fibonacci target that we wanted to see, right? You never got that dump to 452. It only made it to 462. You did get a 4-hour capitulation move. So let's take a look at the daily. It would be nice to get a daily correction down. So perhaps the only play in Lulu, like I wouldn't chase it here. This is where I would be a disciplined trader. I would be waiting for another swing lower. And this could actually still form a bigger connector and then turn down lower later. So maybe, but if the connector is finished here, the target is now 431. But the thing is, it doesn't have to do that. The correction could be over at 463 and it can go to new highs. It's just I don't like the setup. The setup doesn't meet my system's criteria. I won't chase it. Now you could try to buy it here and have a stop loss at 462, but knowing that there's like a 50-50 chance you're gonna be stopped out, and then you could try to pick it up down here. But if you do get lucky and get it down at 431, or let's say it bounces higher and you get this leg later, that would be a much better setup, here. So this is what I'm looking for, guys. So this is Lulu, but from an 4-hour RSI, that cycle was done, and that's why we got the bounce here, but it's truncated. The daily has bottomed out, but I would love to see this maybe rise a little more and then come back and have the daily bottom out like it did here. And then it has a great setup, an absolute spectacular setup for a long-term hold, daily cycle hold for many, many months of gains, because it did have a bullish breakout to all-time highs. So this is definitely a buy the dip, but I think this could be buying it too early, but it's 50-50. So you'll just have to do what's best for you on that. But it is turning higher against this low at 463. So it could continue, and I just can't predict the future. So you'll have to figure that out. This is kind of in no man's land. As a trader, it's one that I just have to sit out. The setup never met my criteria. I won't chase it. I won't speculate. I'll just watch it and keep it on my watch list. And perhaps I'll get a dump. Anyway, that's how I think of this IC. Yeah. Yeah, 13 cents does sound great. Yeah, why not? Throw $1,000 in it at 13 cents. Who knows, right? But I wouldn't buy that thing here. I definitely wouldn't be playing, or I wouldn't short it here because you got that wave 2 bounce coming, or that may still happen. So that's not good. All right, let's go to some of the other requested stocks that you guys have. ALT and Sava. Let's take a look at those. Altimmune. So we've done this one. Let's take a look at how this is going here. So we did get that wave 2 bounce, right? We did get it. Now it looks like wave 2 is over. So now, and if you look at this chart, look, you have a 1-2, 1-2. Look what's to come. So yeah, this thing is short against 13.12. The wave 2 is over. But let's just take a look at the wave 2, just to kind of prove to ourselves that it's not an impulse off the low. Now, that's definitely 1, 2. Now that could be. See, here's your first cycle, 1, 2, 1, 2, 3, 4, 5. So you have 1, 2, 3. So you still only have a corrective structure, an ABC structure off this low. So it's an ABC structure off the low. ABC structure off the low, 1, 2, 3, 4, 5. Once we make that 5th wave, that will confirm the top's in place. But again, remember, you get 5 waves, it comes up, and then crashes. So there's nothing you can really, like, again, this is a no man's land for trading. It's a 50-50. I would never play for this bounce. I would never hope, to catch that. I would never short that here. either, because it could also correct in 3 and fool us and do a WXY later, but more than likely that's not what's going to happen. So this is where I would think that one is ALT. Sava is let's take a look at that one, and I don't have that on. I think we've done this chart before. Maybe not. Maybe we've lost the information. I want to say I've seen this symbol before. All right, so again, you know, we look at this as a nice ABC correction with a massive rally higher. It looks like an impulsive rally off the low. So, I mean, right away to me, you know, something like this. Not enough chart data to really do a proper RSI analysis. Well, at least on the monthly. It was interesting. It was incomplete on the monthly. You know, although that's a lot of bullish divergence on the monthly. Let's take a look at this impulse off the low and see if it's really an impulse. Yeah, that may not be an impulse. So yeah, I would be, again, danger. It looks like it's another 3-wave move off the low and a WXY corrective pattern of some kind. And now it's taking its next leg lower. So it's you know, and you know, there is support potentially. Let's see here. Negative numbers is not good. That could be a go to zero chart. So right now it's in this Y leg. More than likely this low, whatever this is going to break, but it won't be a straight line down. It does look like to me that there's going to be a bigger counter trend rally coming at some point. This is your first cycle down. Your 1-2 is right here. And you see you broke that low right here. You broke the low. Now you have a lower low. So that confirms. So this is a stock to short. I would not go long it, but you got to do what's best for you. It looks like we're in another 1-2 of a smaller degree. And there's no guarantee this 2-wave will go higher. It could. Again, it's 50-50, but at some point, some news will come out, and it'll be a wipeout type move. It looks like reverse splits are in order for this company, and good luck trading it. Divergence here confirms this is impulsive, so I don't like an ABC flat, so I like a 1-2. This looks like 3 waves. It looks like that 2's finished. Down. So I would say it's a short against 32.42. It's a short into, you know, essentially zero. But if we do break this 32 level, the 2-wave could pump back up to 46. So just keep that in mind. That's the count. Hopefully you're not long this or hoping to buy it, because it doesn't look good. I don't know what this company does, but it isn't looking good for whatever they're doing. It doesn't seems like a lot of reverse splits are in order coming for this company. Okay, IWM, Russell. The Russell index is, so my forecast for the Russell has been playing out pretty nicely so far. We bigger picture, just to give everyone kind of a look at where we are, bigger picture on the Russell. ABC for the W, and then this massive connector wave here. You know, so you have this WXY, the finish, the larger degree connector, and then Y. So this is kind of the count. The higher X goes, the higher the target in Y. If we could actually retest this high at 246, or even break it, and it could do that, guys, then Y could just retest the lows. It should break it, but retest. So that's why I don't have a target on the Russell, because it's very much a wild card. but I do think the swings to me need another swing higher in C leg. I do believe you have this A, B finished, and now we have to, you know, you see how long this impulse was. You've got a similar impulse. So I do think what it seems like the indices are going to do is the Russell has more room to run. The Russell, the dogs of the Dow, the SPYD has more room to run, and tech and some of the SPY might take a breather. We may actually see those turn over first, and then these kind of take the baton and finish. And then when they're all in sync, you get that market crash everyone is expecting. Of course, this doesn't consider Moon Boy. Now, Moon Boy scenario is basically the Russell truncated here. We did get a lower low. This did break the October low, and it fooled everybody in a very irregular correction. And it's just going to go vertical in wave 3. That is unlikely given the weakness and the fractal nature we've always seen in the Russell, where you get these pumps and then crash, right? You see how you consolidate, you pump and crash, right? And I think you could go back and see this time and time again. Here you kind of pump and crash. So the Russell tends to have these sideways consolidations like here and then crash. So it's just likely to me that the Russell will do something similar on a much higher degree for even more violent Y leg when it comes. So I do think that this is going to happen. This is going to happen. But, you know, nothing's guaranteed. So if it doesn't, it won't matter because, you know, the long position was put on in, you know, in these areas here. It did truncate and B. It is in a 1-2 at the moment. And it could still be in 2, right? But this cycle's over. You have 3 and 3. So if we could push up, then yeah, then the 2's in place. But it can also come back down. So you don't want to get too bullish here either, because you got to be careful. So you could still see it drop to 193, 192 down in this area. So it's a 50-50. It's in the middle. It's in this area that the market is in indecision at the moment of what to do. It doesn't know if the 2-wave needs to drop more or we're ready to Moon Boy out of this. So we don't know, and I do believe a lot of the news next week will drive that behavior, what happens. But the market is setting up for a big move, I think, one way or the other. But if it is bearish, a bearish break, I believe that will be supported. And I would not think it's a super crash. I do think it would just be the 2 waves extended deeper across the market. These 2 waves will just extend deeper. There would be buying opportunities if we do get a lot of bearishness next week. These are going to be, I do not think it's the start of the crash. I think it could be a very big, nasty sell-off, which would be good, but I don't think it's the crash. And of course, the alternative is the Moon Boy plays out and you get a fork blow off top and everyone is blown up short. So, but I think it's a big move, but I don't think I honestly do not think it's B is here. I just don't think it's ready for that. All right, Miss Mitso, I'll go to yours, Tesla and Zoom. Yeah, we really nailed Tesla, guys. Tesla was if you saw my video update, I gave you guys the stop out here, right? This is where the market showed their hands. It's like playing poker and the guy actually tipped their cards by mistake to you. Someone's like, whoops. You know, once we made that lower low after so here we had a cycle break, right? You had this whole cycle break, and then you made the lower low. That was the market tipped its hand by mistake. Whoever panicked. And then it became a 1-2-1-2 crash formation. But this was a stop out. So our long was here. Our long was at 209. We stopped out at 206 for a couple bucks. And that's why my system works, because you only lose very minimal when you do lose when you buy. So now the new target, as I have down here, is at 173, 160. So this has to play out now. So this has more downside, in my opinion. And if it doesn't get there, it's just going to take longer time. So like you've got these 1-2s these 4s and 5s have to play out. So you're going to have to be patient if you're trying to play long Tesla, right? You've got these 4s and 5s. So I would just kind of, again, leave it on your watch list, but I would no, there's a couple things working against this stock right now. There's a couple things working against this stock. It trades with the green complex. The green complex is in trouble, guys. I mean, I've never seen sentiment so low, right? I mean, I've seen so much negative news on electric vehicles the last week on CNBC on bearishness. It's crazy. So the sentiment is dirt in the dirt. And TAN is the ultimate green ETF, I call it. And it's not done yet. We called the 4. It's got more downside, right? Look, it's got more downside. First Solar has more downside. Enphase has another leg lower, right? So the complex of green stocks is telling me there's more weakness. And then when I go look at oil, right? If I go to oil, oil is hitting a sell area to finish this pump. And I guess I gave you in my video, we were going to pump out of this, and we did. Now we're looking for a reversal. And guys, look where we're going. We're going down here. Now this is, I don't know how this will correlate with the market. This could be bullish, super bullish. This could be like the Fed won, oil's cheap, consumers have money, and it's hallelujah and praise the Lord, and everybody's, euphoric. Or this could be deflationary, massive recession, risk off, there's no demand, crash. So I don't know how this will play out with the indices, but look, this will make all the green stocks go down. Now, when we get to this area with oil, then the green, the TANs, the First Solars, the Rivians, and all that other shit, NEO, those will be long-term investment opportunities if you believe the company will be viable. Because again, grand supercycle corrections can go to zero. And there's no guarantee those companies will survive it. Now, Tesla will survive it, of course. But I mean, I don't know. Will Rivian survive? Maybe, maybe not. Will Fisker survive? Maybe, maybe not. I don't know. I mean, Fisker was under a penny now, under $1 now. My last update, I told you guys Fisker was a go to zero. I think I pissed someone off. But the chart's the chart, guys. The chart tells you what's going on with these companies. There's no guarantee in a grand supercycle correction the company won't go bankrupt. So you got to understand that. But when we do get down to these areas in oil, I do like the green community, or TAN is trading in the buy area, or First Solar. Once we get these stocks in these buy areas, then we have to be ready for energy trades. We have to be ready for long-term trades and back in the oil and the oil services, and all that crap gets bid again, because we could begin entering a massive wave 3, and that may coincide with the massive market sell-off as the inflationary impulse takes hold again, because oil, guys, is gonna cycle higher. This, on the bigger picture, is 5 waves up. We are going to get a bounce out of this. This high at 131 will break in the future and hit this area to finish a massive grand super cycle pump for then decades of consolidation and lower. But while we pump through this, my guess is the first part of this pump will be bullish and reflationary, or everything is good in this area. And then it will be like it was here. It was like everyone panics and commodities melt up again. And then maybe you get that sell-off. So this could be the blow-off top in the indices as we pull down and we pull up. And then at some point, it becomes negative for the market, inflationary. And then the Fed has to go, oh, no, what did we do? And then, boom. So this is going to happen. This leg is going to happen. So, yeah, when this happens, those green stocks, everyone's going to be loving electric vehicles all over again. So get ready. Unfortunately, we will live through this. There's no way this can be bullish for the market. There's no way the market is going to be cool with oil at 190, 170, 160. There's no way. So whenever this happens, there's going to be a massive market drawdown somewhere. This will either be the C leg in the market, or this is going to be after the melt up and Moon Boy ends, the Moon Boy pump ends. This is how it ends right here. So this is something we keep an eye on. But right now, that's not the forecast for me. It's lower. And that is going to pull down a lot of stocks that are tied to the energy sector. So that's why I don't like longs in energy. I don't like longs in energy. And if the market surprises us and goes higher, then it could be just a bigger three-wave move and X extends. Fine, it will still this leg still needs to happen, so it doesn't matter. This leg has to finish out. Okay, guys, let's jump to other instruments, and this is also why I don't really like natural gas, like as a like go all in with your whole stack right now because of this leg. I just now natural gas can, doesn't have to fall, but it typically follows oil, and so I just, I still show this 1-2-1-2 count, but perhaps you get this 1-2-3, a corrective move, and we actually come back and break this low. Like I just worry. I do not like the price action I'm seeing in here. I've been on the sidelines in natural gas, guys, after that little bit of a pump here. I got some money on that pump, but I still skeptical. Like I don't like this price action, but we'll wait and see what happens. But yeah, these are some important pivots here. Um, I'm starting to doubt that this may not be the low at 196. It may not be. But for now it is a tradable low. But I just worry that I don't like this price action. The moves down are too violent. It's just too violent. It just something bothers me about that. And then seeing oil here. So I think if you're long any of this, I think you gotta be really careful. I think you gotta be really careful, more cautious. And here I was more confident, but I mean, I'm watching this price action. Something, my instincts are telling me there's something I don't like about it. Uh, Again, it wouldn't surprise me to see a three-wave move up, still up to 4-3, but then I could see a collapse. So I'd be really careful trading it right now. All right, let's go to Bama. Bama for 10, BTU. Yeah, I wanted to get in BTU. I've been watching that. It never got to my target to get back in on it. But I will still watch it if I can get a dump in BTU here. Let's see if I can find it where I've got it in here. Yeah, see, it's on my watch list here. See, I had to buy at 21.53. We never got there. Um, so I'm a very disciplined trader, right? I don't chase, even though we were close. I could have chased here. Maybe should have if I was more aggressive and had more of a belief in it. Now, one of the things it's got going for it is you broke this high in this sequence. So to me, it looks like the correction is over and you have this massive correction. So it does look like it's turning higher. And for whatever reason, so I had this, again, I have these different charts here. So RSI, massive reset on the 4 hour right there. So look at that. So that's a massive low right here. This low at 1767 is a massive low that more than likely will never break in a long time. Now this is where you're like, where do I get in on this trade? Where do I get in on this trade? And you look and you're like, okay, so where's these cycles at? Here you maybe had some RSI divergence. You had a cycle reset here, right? But you have a lot of overlapping waves. So this one, you have to, I think you have to go with the more bullish labeling. I think you have to go with this more bullish labeling. So, I don't know if the recent ban Biden did with LNG exports or whatever is going to affect this like fundamentally, but it looks like it's about to go into a 3 of 3 moment. It just looks like to me it's ready to burst out of a massive correction in a 3 of 3 moment. So if you're in on it, I wouldn't sell it, but I wouldn't chase it either. It's just like, it's one of those ones like either you missed the move or you're just gonna, play the lottery ticket, wave 3, buy calls and play the lottery. But to me, the only other possibility is you're still in this 2 wave, almost like I had before, and you get a rug pull in a flat. And that would be a gift if this happens, something like this. I don't think that's going to happen. But, I'm not a fortune teller either, guys. That would be 2080. So if for some reason the market dumps, this dumps, and I don't know why it would, but it does, incredible opportunity to go long here. Here you're going to just have to chase it, and you're just going to have to prepare to lose and stop out at 22. So there's a lot of risk here, big stop. So a lot of money can be lost, but also you could have a lot of gain. You could have big upside. So I don't know what you're going to have to figure it out. But to me, it looks like, see, the RSI supports this. It looks like the daily cycle broke today, higher too, or is about to. Testing the trend line. Yeah, next week, very important week for this. Yeah, it's like I said, we'll have to wait and see. But this is I would go with discount for now, because if you really look at this wave in this way, I mean, and then you got that vertical nature. This is what it looks like to me. Bama. A long play over the next 6 months. I mean, the next 6 months, the market could be very sideways, not without its pumps, of course, right? Not without its pumps, right? Because in 6 months, this could play out, and then we could be back where we started in 6 months, right? We could be at this one, right? We could be like in 6 months, boom, we could be somewhere around, we don't know. So I think in 6 months, it's hard to say. I think tech would be sideways. I don't like tech. I think tech is in 4s and 5s, or even at 5s at the moment. 6 months, the IWM could have peaked and revert. We could be completely sideways. What could pump in 6 months that's going to trend higher? I look at the dollar index. So the only thing that I can see possibly in 6 months getting support is this dollar index dropping like I have here. And that would be rocket fuel for gold and silver. So perhaps the best trade to be in would be silver for over the next 6 months to finish its sequence higher before it syncs up with the rest of the market to pull back. Because silver, big picture, guys, silver is ready to explode, guys. It's like a ticking time bomb ready to go nuclear vertical. And these moves go, when it blows up, it goes vertical, man. And we've seen that. I mean, so silver is in a running flat that's been going on since 1980. I mean, geez, 1980, right? Someone I follow posted it's the only commodity that still trades under its price in 1980. That's how depressed its price is, right? This is lower. It's the only commodity that's that cheap, relative. So we have a running flat that finished here, and now we're in a 1-2. Now, guys, look, you've got a 1-2, 1, 2, 3, 4, 5, 1, 2, and now you're in whatever this is, this mess. Now, it could still be 2, but looking at where the dollar is, I don't think it's likely. I'm thinking, again, I'm just thinking out loud, that this move is going to become some kind of leading diagonal out, because this looks like 3 waves, right? So my guess is it's going to be, not straightforward, but I do think you'll get something like silver to kind of do something like 1, 2, like that, and then form another 1, 2, and then moon. So I think in 6 months, fast forward, we may be up at $30 silver. And then it retraces back between the 4 and the 2, wherever this lands. And then the other alternative is, right, there's another count in silver that 2 is done here, and then it's just going to moon, and then it goes to the retest of $48. And if it goes to 48, then the count is this. That's the count. Okay. All right, let's take a look at the 45-minute. Let's take a look at where we are. You see the divergence on the 45-minute cycle. Let's look at the 4-hour cycle. You have divergence at the peak right here, and you have a full cycle reset here, and the cycle is held. So this count is this is a valid count, guys. This is a valid count as long as this low holds at 2190. So I did take a long position, but once I saw that, so this cycle, once this cycle broke, I was looking for lower, right? I was looking for lower, but once I saw the cycle break on this pullback, I'm being aggressive. I'm aggressively buying against this pivot at 2189 for the potential upside to $30, or potentially I hit the jackpot and we hit 48. And guys, that's what's going to happen. That's probably the best long opportunity in this market that I can think of in the next 6 months. But you'll have to do what's best for you, right? You're going to have to do what's best for you, and and good luck, trading. But that to me is the best 6-month opportunity. But ask me next week, and I may change my mind. All right, let's see if I got any more super chats. All right, I'll just keep going with everyone's questions. All right, so Don, I only do the first two, so I'll do EOLS. Let's see here. EOLS. Looks like we have done this one before. Let's take a look at where we are with it. So we called this 2-wave, and look, it looks like it's getting ready to go vertical, man. Look at this pattern. It broke out. Inverse head and shoulders, whatever you want to call it. It's kind of ugly, but it broke out. Yeah, I mean, this is one where you just kind of hold long. So to me, it's in a 1-2, 1-2 setup. And I mean, maybe you could put the 2 here, but I'll leave it there for now. It doesn't really matter what this count is. It's got more upside. It's definitely got more upside. Yeah, it's coming out. It's coming. It's making a turn. It's making a turn, guy. We broke this high, which is good. So the shorter time frame, we haven't broke that. So it's still a 1-2. So it's still a lot of 1-2s. I mean, this is the opposite of a crash formation. This is this is a moon formation. Moon formation. Now, could it be that bullish? I mean, I don't know. Again, I don't know what this company does. I don't know why people are loving it. Now, look, this first cycle is coming to an end, so don't want to get too bullish right here now, because you should get a pullback, right? More than likely that support's going to be tested, so maybe do something like this. So this is what I'm thinking, but you'll have to do what's best for you. You really want to see this 5th wave, right? You want to see this 1285 taken out. If it can do that, then there's no doubt in my mind this is bullish and it's going higher. But right now, you still have a lot of waves. Like you could call this 3, and then a connector, and then 3. You could call that a connector for this cycle, and then it comes back. It just crashes down and retests the low at 6. For that to happen, we need that low here to break, and this breakout to fail, false breakout. So as long as I think 1142 supported, that scenario is not happening. So I'd be really watching that level. All right, that's EOLS, and then MSOS. Let's see if we've done that before. Looks like we nailed this one pretty well, except we never got that double correction. Looks like it did pull back in our area, but then it found support. So we knew the 2 was going to end at some point, and it did, and now we're in wave 3. So we're looking for these targets at $12. So I still think it will get there. It's just going to take time. So now we need to read the cycles and see where we are with it. It looks like this daily cycle is coming to an end soon, but man, this is again, this is still pretty bullish. Yeah, so here you go. So it's pulling back. These waves will overlap again. You don't have any extensions. So yeah, I would label it this way. I'd be looking for like 872 and then out, something like that. Because more than likely the correction will tag the wave 4 low, or maybe 870, yeah, somewhere around there. This looks too shallow to be finished. I'd be looking for a 45-minute reset. So it's got to do something like that. Okay, well, let's keep going. All right, so TMF. Yeah, we hadn't looked at that one in a while, our bond market, but so TLT almost hit our buy area. We had the buy area. We had a buy area at 92.97. It hit 93.09, so it's close enough. So more than likely, bonds are ready to reverse at any moment. Higher, rates lower, which means TMF higher. I want to see this leg up. So we need to wait for this cycle to break. Let's take a look at TMF. Take a look at where our connector is. So there's our connector. So if we look, shallow connector, is that another connector? Let's take a bigger look at this. So you see this is interesting that it isn't lining up with the TLT. You see that? So we have another connector right here. So just like Tesla, you see it failed right there. So actually the setup is and this is the first time I've seen this. I analyzed this. I haven't looked at it in a long time, to be honest. But maybe the market is tipping its hand. It should be an ABC, but so yeah, I think TMF is showing you danger. If TMF is showing danger lower, then the TLT more than likely is still going to go deeper in this area. Then maybe the cycle isn't finished and we'll go deeper. That would mean a market sell-off imminent, which would also mean the wave 2 goes deeper. So the market may have tipped its hand to what's going to happen now. So we may get this wave 2 after all. This wave 2 may go deeper in tech. So get ready because I would expect the bond market rallies and the technology complex gets hit with that. So that's kind of new. So I was looking at this 10-year chart we did tag. Again, we fell short of our area, right? This was our area. We fell short, but then I'm looking at this pattern. It's real ugly, but what it could be is a triangle. And if it's a triangle here, then it's a bearish connector. And that means it's going to continue. Whoops. It's going to continue, and that means 2 will go higher, and we'll have a new target. And then this will do that, right? And that will hit 449. This will be, again, market under pressure, right? So this will put the market under pressure, wouldn't it? So, but, and here's the big but, is the chart can be interpreted multiple ways. That's a bearish interpretation, but this is also still valid as a truncation. So it's like a lottery ticket 50-50. I don't know, but when you look at TMF may have tipped his hand. So now you have some evidence that actually you are going to get that spike higher in rates, and that should be bearish for the market. And again, this is 5 waves down, so we should get one more swing lower, even if it's corrective, right? Even if it's corrective. And so I think you gotta be careful in bonds being long. Bonds right now. I think you gotta be really, really careful in looking at the TMF. The TMF shows you that there could be some danger. There could be some danger lurking out there. So just keep that in mind. If this, when did this correction start? And the December 28th, what was the dollar doing on December 28th? Yeah, we turned higher. So this could also mean the dollar takes another pump higher, right? This is a connector. And then if that happens and B goes higher, that means we may get those targets in gold and silver we want to hit, where gold does dump to 1922, and then silver actually plays out the bigger wave too here in a 3-way, and we have this labeled wrong, and it comes back to back test 2062, 2055. So it's really a tough market to trade. There's very little clues, but TMF may have given us, the market maker may have tipped its hand, showed us his cards with the TMF today as we look at it. So that tells you you need to be really cautious and not surprised if we get a big sell-off next week. So just get ready for that. But again, there's no guarantee. Things can truncate, and I'll see if there, let me go back to TMF and see if there's any other interpretation of the TMF that would be more bullish. I guess you could say it's a flat from here, but it's very unusual and unlikely if it is. So the only other alternative is some kind of flat. Like that. And then we go higher. But that's it. That's the only other interpretation I can think of. So yeah, this is not good. Because this is so deep. It's very unusual to get this to look, flat to look like this. But yeah, you're just gonna have to do what's best for you, man. But I would be really careful with a lower low. This is just like what happened with Tesla. I mean, you could copy and paste this over Tesla's chart, and what happened with Tesla? It dropped. This is almost the same setup with the, right here. I don't like that. I don't like that. And you see you had the cycle break on that pump. So yeah, I think the bullish case for the market next week could be challenged given this. But ultimately you'll find support. And we will get another leg higher. Let's go to UNG. Natural gas, like I said, is the price action concerns me. Price action concerns me in UNG. But let's look at UNG specifically. Looks like a reverse split or something. So if we're trading against this low, it looks like that low held here. No, it broke. So you have 5 down. You have 5 down. This definitely is not a flat. So UNG is telling you that this at 18 is going to break at some point because you have 5 down. It could also be a 1-2, 1-2, and it goes 3. So I don't like trading it here, and I don't like the price action in natural gas to take any long positions. This looks like a 1-2, 3, 4, and now we're in some kind of wave 5 that either will finish and rally or may already be finished and will rally more, but because it's 5 waves, the trend is lower. And so this is in like kind of no man's area for trading, and I would expect it. I would expect this low to break because of the impulse. This was kind of, it had to hold at 1938 to keep the corrective structure. But if you're in it, you should have stopped out right here, like I did in Boyle, and hopefully you just got to give up on trading on this on the long side, because this is showing some dangerous price action that I don't care for. And then if oil's going to turn lower, it should take this lower, right? It should, right? So I got about an hour in, so I'll just kind of scan through some questions. Unity, Unity. Unity, hadn't looked at that in a while. Let's take a look. I think they're like a supplier for Apple, or they do something for Apple's these glasses, these goggles they made or something. But I could be wrong. I'll just type it in here. Okay. So the buy area was 31.95. We hit 32.31. It looks like the cycle is broke and back test. So more than likely this too is finished. Almost looks like Symbiotic's chart. So yeah, I think it's like this is an important level at 32.19. Um, the cycle hasn't broke yet. Okay, so you don't have, it's not definitive, it's in two, so this could still be 5 down. So I would still say that it's a buy in this area. The cycle has not broke, so it's still a long opportunity. You can't say 2 is in, but if we get some more upside, that will confirm the 2 in the cycle break and either a new connector or a new turn higher. The other alternative is it's some 5th wave down, and then this is just some flat and an A, B, C. Let's take a look at this leg up. Yeah, as you see the divergence. So it doesn't look like a flat to me. It looks like this is 1 here. 1, 2. Yeah, this looks like 5 up. So to me, connector, 5 down, A, B, 1, 2, 3, 4. Yeah, it looks like it wants to take a dip into this area. It just seems like it does. There's your first 5. There's your final 5, and there's your connector. But we'll have to wait and see. We'll have to wait and see. But yeah, so it looks like it's setting up to become a buy in this final push lower. If it could come out of it, then it's just truncated and our labeling is off, and probably as a WXY correction, just put W here, X here, Y there. So we'll have to wait and see. I'm just looking through your comments. Yeah, so China, so fundamentally, there's some fundamental news around China. Absolutely. So China's in an interesting position. So this is my bearish count on China. Look at all that has to play out. And look, guys, my buy area on China, look at that. Are you kidding me? 5,000? Are you like, I mean, this is like crap in your pants. Like, oh my God, I'm ruined. Like Great Depression, jump off of skyscrapers in China if you have China stocks. Now, this has to be bearish for the global financial system in our stock market. Like this has to be a massive meltdown. So if this plays out, this is China bringing down the entire thing, sinking the entire thing, the whole ship. So now it may not be bearish at first, but eventually it will catch up with the world markets, right, at some point down here. Now, I gave the alternate count. there's an alternate count that I do believe is Moon Boy. As I said, you could label this 5 up off this low, right? You could. I'm forcing 3, but I'm saying it could be 5. But here you have like a 3-wave move, right? You have a 3-wave move, a connector, and a 3-wave move. And you see this low? It didn't break this low. This could be 1, 2. And we could be coming out of 3 of 3 of a massive move down that started all the way back, really since, you could say 21, but really since 18. Okay, guys, so here, yeah, 21. This whole leg. And then if you look at this could be 3 too. What if that's 3? This could be a 1, 2, 1, 2. This could be like generational, like give to your grandchildren long opportunity in China if this is a double bottom. And if it is, and this hits wave 3 of 3, grand supercycle in China moons, that means the dollar should be very weak, and that should be great for everything. It should be a melt up. And to me, the fundamental driver of that is stimulus. China unleashes the bazooka, guys. They come out and go, yeah, we're not just banning short selling. No, we're not just saying, okay, we're going to buy 200 billion of stock, which I think it said it would do, you know, and all that shit. No, we're going to have $2 trillion of stimulus, and we're just going to build empty skyscrapers all over the fucking country. And who cares about, the whether we need them or not, just a pump. That is what I think. If you're a bear, you got to be ready for that type of bazooka. Just like total craziness. And wouldn't that push silver up? Wouldn't that push commodity? That would melt. There would be no amount of tightening. And do you think the Fed will go, oh my God, guys, China put in $2 trillion of stimulus. Commodities are starting to moon. Yeah, so Americans, we need to have 10% interest rates, to do our part, to pay our share, to help them out, help out our brothers overseas. You think that's going to be politically viable during an election year where Trump could be coming in? I mean, that's like suicide for the Federal Reserve as an institution to put higher rates on Americans to offset China stimulus, reverberations across the financial system. They'll never do it. They'll just let it happen, and then they'll point the finger and say, guys, look at this shit. It's not our fault. There's nothing we can do about it. And let the administration handle China for being so reckless. I think there is more than a 50% chance China unleashes a bazooka for stimulus. I just think I think it can happen, guys. And if that happens, I do think you have a good ingredients for Moon Boy. You have perfect ingredients for Moon Boy. And if that happens, that's what will happen. And then I do think then the commodities finally get out of hand, like oil finally gets to a point where it's out of hand, and then the whole system comes tumbling down again. But I don't think the Fed's just going to be like, all right, cool, we'll have to raise rates, guys. China had stimulus, or CPI's back up because steel's going up again. All this stuff's going up again, guys. Americans, you got to go now to 7-8% rates, while China's pumping and moons. And no, they're never going to do that. It's not politically viable. I think some people are posting like, oh, the Federal Reserve is going to, have to do that. The Federal Reserve will not do that in an election year. They will not raise rates to help another nation pump its market. It will never happen. So if they do that, they're just going to allow that shit to go through the system, and they will just sit by and let that shit unravel, because they can't get away with it politically to pump rates to 10, 8, 9% to try to throttle back while China's mooning and their plan is, this is never going to happen, guys. So that is the bull. I think, to me, the Uber bull case, the Moon Boy case, is you're begging China to have China stimulus. You're begging them, like real stimulus, like $2 trillion of pumping, building stuff, making shit. That's what whether they need it or not. That's what you're hoping for. If you don't get that, then I think you're going to get this, no matter how much stock they buy. But the money's leaving the country, like you guys are saying, and it's going somewhere else. So then you're going to get this, and then we'll get this kind of. So I don't know. I mean, do you know what they're going to do? I have no idea what they're going to do. But this is coming to a head. This is coming to a head, guys. This is coming to a head. Like, And that's why the market is where it is, because it's all this shit's coming to a head. So market's at a massive point. So okay, so enough of that. Yeah, I haven't looked at Pfizer. I know it's pulling back, right? It was starting to pull back with some of the other healthcare stocks. So let's take a look at how it's been doing. All right, so whatever this is, it's either a 4-wave, and this will be 5 because of the pump, or it's finished, and that's a low. You have a massive trend line support here. Now, I don't like the 5-wave move down, right? You see this 5-wave move down? So I would be thinking that, this was definitely a nice trade, but this to me looks like a 4-wave. And it looks like it does seem like it couldn't have one more lower low down into this area. But this is in a bottom-in process. The other alternative is it truncates in 3 and it retests this low and holds it at 25. You want to see the divergence reset a little bit higher. Let's take a look at the 4-hour. You see, you don't have divergence on the 4-hour, so this is a tough chart here because typically these kind of lows can be really bullish, and so things tend to truncate. So it could be something like that, and it truncates. So it's really challenging. The trade is over. The trade opportunity is over, but the investment opportunity is not over. So if you're an investor, you just have to dollar cost average, here, maybe down here, and then over the next months and stuff. And then at some point it will bottom and have a 1-2s, and then at some point in the future, in the years to come, it will be out of this mess. So I think you just kind of have to have either the long-term horizon on it, where your dollar cost averaging, here, maybe some here, and then you won't buy it again until you're down here. And and then maybe then it runs and you take some off, some profit, and then okay, it comes back. So you're just going to have to play this, because this pattern it could be tricky. But I do think from a trade standpoint, there's no trade setup in this unless it drops again. It takes another lower down here to 24.68. So the next trade setup would be this area for a nice bounce or a massive low. This is 50-50 if it's a low. If we can get another high and break 30, then yeah, then that's the low, guys. That's the low. But until then, it's just kind of like, you just kind of got to watch it. If you miss the move, you can't be like, oh, I want to get in Pfizer, not for a trade. Now investment, yeah, investment, sure, buy it here. Buy some here if it gets, but you can't put oh, I'm putting my whole stack in here. No, you put 20% of what you want in it here. You put another 20% down here if it comes, and then you just kind of build your position over time as a long-term investor. That's how you do this. But this is the area to do that. This is the area to do that. All right. Now, Pfizer pays a big dividend, big fat dividend. Guess what? The SPYD. I know it's a big stock in the SPYD, right, guys? And I mentioned SPYD. Well, the SPYD is, if I can find it here, the SPYD is coming out of this area. I gave the buy alert here, and we've pretty much gone vertical. The best PYD is showing you that Pfizer may not have a lot more downside. Now, we could still, the market could still be in this flat, but more than likely this low is going to hold at 37. So I don't think Pfizer is just going to collapse lower, because I think the SPYD will support it, but I could be wrong. It's just my guess. But anyway, do what's best for you on that. I'm jumping to Nvidia, guys, because I had a question about Nvidia from someone that follows me, and I will answer that now. How deep can the 4-wave go? Well, 4 waves tend to tag the 4 waves at a lesser degree wave. So the question is, we need to find the 4-wave of this cycle. I have it here. Now it's pretty deep. That's 546. So we need to confirm that's the case. So let's take a look. You see that? So yeah, I would put that there. So you could see the 4-wave hit 546 when this is in. So now, but bigger picture, 4 waves love to retrace to the 618 of its bigger cycle. So we need to find out. So this 4-wave is this impulse off the low. So that impulse would take us down to what do you know? 540. So that would be my target for the 4-wave. Do what's best for you. Whoever asked me that question on Twitter, I don't remember your tag, but that, of course, it's not a straight line, guys. This could be a triangle that dumps. This could be a zigzag. This could do so many things, but that's the target area. This is the area for support right around 440, 540 for one more push higher in wave 5 or an extension. Could you imagine that? Another 1, 2, 1, 2, could it do that? I mean, it can. But at some point this is going to end, right? But it looks like to me we're ready for this 4-wave, right? We're ready for this 4-wave. And this is the area that is a classical support area for 4 waves. You're at the wave 4 low and you're at the 618 retrace. It's typically the area not all the time. I mean, it could surprise us and drop to 600. I'm not guaranteeing this, but I'm just saying it's typical. This is a typical 4-wave, and you can see it kind of matches. It mirrors this 2-wave, which is its cycle, right? You see this 4-hour cycle bottomed here, where this 4-hour cycle needs to bottom and take out that trend line right here. It needs to take out that trend line, but stay above that. So it needs to come down somewhere around here. So anyway, do what's best for you, man. Whoever asked me that. I just don't remember your handle. AI and GME. Yeah, AI and GME. So AI is still tradable as long as this pivot holds at 23.54. If it breaks, this is a connector, and then it's gonna get wiped out. It's gonna get wiped out. So definitely, I will stop out of this if that breaks, and just trade didn't work out. But this is the trade, and this is the count. So good luck. I mean, it's in an area should reverse. It's definitely finding support here, right? Look, I mean, but can the bears take control? Yeah, if it does, it'll have a lot of trapped people, and it will drop quite a bit. And then GME is in same situation. GME almost broke a massive pivot, but it held the other day, right? I was watching it, and it held because the Russell Index held it up. And if the Russell Index is going to finish that move higher, then GME should still be supported like I expected it to. Let's see if I can find my GME. There it is. You see here, it held a higher high. So far so good. It was like, whew. But you can see these deep retraces. You see that, the deep retrace, and look, it goes almost for, I'm looking for that, I'm hoping we get this vertical soon. So we'll wait and see. But yeah, you got to stop out of GME at 13, maybe 1350. The only other alternative is it's a massive flat correction, where this is A, B, C, and a 1, 2, 3, 4, 5. But I don't like that so much. But it is possible because then you have 3 up, unless unless the 5th wave is kind of masked, and it could be. So you could try to buy it here again at 1320, 1315. I mean, obviously this low 1189 has to hold, but it's a tough trade. It's got a lot of opportunity risk reward wise. I mean, I'm sure like every trader, we're seeing this inverse head and shoulders, but the right shoulder is getting kind of too extended here. But I'm staying with it. If we do, I'll have a decision to make to stop out here or not. We'll have to wait and see, or hope for the flat. and then you get the fifth wave. So I think if we could keep some momentum divergence, I'll play the fifth wave down. If we erase divergence and we have a pretty significant gap down, like we did in Boyle, then I'll stop out here. And it just didn't work out. And then GameStop's in a lot of trouble. It's going single digits, and it's just the way it goes. It didn't work. This trade didn't work, and we'll have to wait and see. But right now, didn't give up on it, and so far that's been the right call not to give up on it, because we did have a 1-2, and even here we had a 1-2, right? These fractals are really something, where you get this deep retrace, almost breaks the low and goes vertical, right? You see here it goes vertical. So that's what I'm looking for, guys. I'm hoping to get that. So we'll see what happens with GameStop. It's gonna crash. Yeah, it's gonna crash. It probably mean crash, but yeah, it is gonna crash. I think it will. I don't believe in Moonboy, but I don't think it's gonna crash just yet. Yeah, now we are gonna. Now it does look like we're gonna get a deeper pullback with the TMF breaking the pivot into that I have here. So if you call this a crash, sure, you can call that a crash, right? I guess it's a crash depending on where your entry is. That's a crash, right? That's a crash, right? But this is going to be supported. If you're hoping for this, you're more than likely not going to get it. And I feel bad if you're going to do that. But if you are short or have puts and you do get this 2 next week, I mean, guys, you take the profit and play this support here. This is massive support now, guys. This is massive support. And many people missed this move. Even I think Kramer missed it. I think all these guys on CNBC, they all missed this move. They all hate the market is higher because they missed the move. The only people that are in this move is dumb money. Retail traders, I guess me, people like me, dumb money made this move. So they're all mad. They're angry. They want the pullback. I watched Fast Money on Friday. They're all like short, buy puts, and they hate tech is higher. They're like, this doesn't deserve to be up here. You don't see crashes when people are so negative right at the top. You see when they're euphoric. So there's no euphoric nature from the professional trading community. They're all mad and angry and in denial. So if you do get this, they're all going to go long because they missed a move. So this will be supported, guys. This will be supported. And you can also make the case that maybe we will get Moonboy because there is so much denial and so much like anger at the market being higher. There's so much anger on TV, guys. The market is where it is. I mean, God, I go on TV and people are like so mad that technology has no business being up here. It's so funny listening. And we're at higher highs. At higher highs, we should be euphoric. It should be like, all in. This is great. Technology is going to run the rest of the year. This is amazing. We got no recession, and the Fed is a genius, and Jay Powell should be president. And we're not hearing any of that. So we're hearing like cautious talk, and it's because they were telling you to sell. And that we were getting a reversal in January. They said, although if you listen to CNBC, they all told you to sell the market going into January. The market peaked out. There's no more room to go. All those asset managers took onto the sidelines, and they all got it wrong. They all got it wrong. I didn't. I got it right, guys. I called these bottoms here to go long, and we're here. Now look at where we are. Now I'm telling you, we could pull back. This could be. You could call this a crash. It could do something just like this at a higher degree next week, but it will be supported more than likely. The crash you hope for is here. This is the one. This is the 2009 crash. This is the one that will cause earthquakes. This is the one where some bank will fail. Some world war will start. Some Taiwan's invaded. Something, Texas starts a civil war with you don't know whatever is going to happen here is going to be a catastrophe. And I bring up Texas. Remember, I said there'll be a catastrophe, a calamity this year, and now all of a sudden Biden, is having this standoff with the tech. Like, did I know there could be, troop to troop? They're mobilizing the National Guard in Texas to disobey the federal directive. I mean, are we setting the seeds for a confrontation like that? I mean, that would be a B wave. Hell yeah, the grand super cycle will come to an end. If civil war broke out in this country and people started shooting each other, you better believe the indices will be fucking down in this area. So did I know that news is going to come? All I know is a catastrophe is going to happen soon in this market that's going to cause this pullback. But I don't know what it is. But this isn't it. Whatever this is, isn't it. So good luck trading. Good luck, guys, on that. Yeah, Neo's got more downside, man. I wouldn't touch it. Still, I think I got it at the $4 or $5 area or something. I don't remember. I was looking at it the other day. I don't like Neo until Tesla bottoms and Tan. Yeah, $5. I'm looking in this area. It looks like it's just in a four wave of some kind or another 1 2 1 2 2. It's lower, and again, we nailed Neo, right, guys? Didn't we nail this? Look, we got the short area. Boom, bam. So why? Of course, it's coming down here. It's coming down here. Zimmer. When will the market broaden out? Thoughts? The market will only broaden out when the correction is actually over. So it's either you got to the market will broaden out either if you believe in Moonboy, which means the market will start broadening out right now as we moon, or when this sea leg is over finally, whenever this ends later in the year. This could be a run-in flat. I said it could also be a run-in flat, so it may not make it all the way, may go down to 390. But whenever this ends, the market will start to broaden out and rally together finally for once. Whenever this ends, so until then, you're going to get this divergence in performance. But if you believe in Moonboy, that we'll start seeing that erased and I would start to see the Russell and small caps really catch up fast. That's what I'd like to see. But then again, there's more than just a Russell. There's a lot of other stocks lagging that are nowhere near all-time highs, like the big cap tech. I mean, I'll just pick one like Trade Desk, right? Trade Desk I still have collapsing, but but it's nowhere near all-time highs. Shopify's nowhere near all-time highs. So you can go down the list. All those stocks need to start really pumping, right? They all need to start pumping, and if we start seeing that, like a Shopify breakout, the shit that's lagged, DocuSigns, the Oktas and all that stuff really start pumping again. ARK, then you need to start believing in Moonboy, because then you're getting a broadening out in the market. But until then, you still got this. You're still worrying, because what will happen is the leaders will finally peter out. Nvidia will finally hit wave 5, and then you'll get this push down. So, guys, I gotta end it now. I'm just gonna scan through the comments. I'll go through the crypto stocks that I have charts on, because I didn't touch on crypto too much today. So the ones I've been tracking is Coinbase. I had this buy here at 117. We hit 118.16 and just missed the target by $1. It looks like to me that is finished, and that this correction is over. So I would say now that we should be heading higher. So Coinbase looks good. If it were to drop, then it's 5 down. 1 2 3 4 5. It would still bounce, but that bounce will fail. So just keep that in mind. Right now, this bounce could go and break this high at 187. So just do what's best for you. I think you trade against this low at 118 long. Mara is in a buy area, guys. It's been in this accumulation area. Again, you're just going to have to be patient, but it looks like it's coming out and reversing. So Mara looks like it's ready to come out. It could still chop around in here for a while, but this is an area where I'm expecting a reversal. MSTR hit the buy area, 437, and rocketed out. This is a clear sign that crypto is reversing higher, and that should be also a clue that perhaps the market may be more bullish than we think. Could we get this next week, get a pullback, and this pulls back, dollar rises, 10-year rises, and then we come out of that. So we'll have to wait and see. Riot is in the accumulation area. Again, this low. So they look good to me. They look good. These corrective legs look over. Look like they've ended. They're either forming a new connector or a new cycle higher. All these. Let's see if there's any others that I've got on here. Now this one broke its pivot, so this one's in danger of bouncing and failing. So this one could take a double correction lower. I don't like trading CleanSpark because it had such a deep correction, but the cycle is now turned higher. I could be wrong. It could be done here. but it more than likely will form a connector and then fail again at some point. Let's look at the other ones, LTCN. Again, looking for this X wave like I have here, and then fail. It made a lower low. Look, you see that lower low after a pump. So that looks like 5 down actually. So yeah, to me, LTCN is showing you a warning that that will go lower in 5. So maybe Coinbase will come down here and you get 5 and get this A, B, C. So maybe crypto's got a much bigger double correction coming. Just be ready for that. So perhaps Mara does the same thing. We bounce and then fail later, but we should bounce more. Hut literally hit the buy area exactly. I mean, guys, look at this. I mean, look, it hit. We had the buy area at 622. It hit 619, 3 cents. So if you would have got the entry, 3 cents. I mean, you basically got the bottom tick in your free money, and it's risk free now. You basically are playing with house's money on this trade. There's no reason to sell it until that breaks. And if it ever did break, what are you going to lose? Like a couple pennies. So that was a good. That one was a good setup. That one worked out really well. I like that reaction. How's Hive doing? Hive's in the accumulation area, just testing it. So we'll see. Do I have BT in here? So BT double corrected. I gave this new target. It could be 5 down, and if it's 5, then again you're looking for a bounce and a failure. If it's 3, the 2 can be in and it truncated. So that's kind of a walkthrough of crypto, where crypto stands at the moment, guys. I don't know why GPT. I gotta probably get a different chart. How's the ETHE doing? So ETHE hit the buy area in a 3-wave move, and it came out and hit a wave 4 cluster, which is massive support as well. So that's why we got a nice bounce. It'll be interesting if we can take this high back out at 23. How about BCHG? Again, it broke that low. So just like LTCN is showing 5 down. And with the 5 down, it means more than likely we will swing down into this area at some point. What was that other one that Kathy Wood won, her ETF? Yeah, I don't have the symbol. I'll have to pull it up later. All right. Stocks I'm not covering because I don't have their charts ready. And I do have to go. I've been on for an hour and a half. I'll just see if there's any more super chats. I don't have any. So thanks again, guys. Yeah, so here you go, guys. I'm thinking my market forecast for next week is lower given the TMF breakdown. I am expecting a dump of some kind, but I believe that will be supported. And then we'll get a pretty good rally out of that. It could be Powell saves the day. We could be down here. If we're trading down here into Powell will save the day. If we're trading in a wave 5, then there's a lot of danger Powell is going to dump the market. So I think we got to wait and see where we are going into the Fed news on how the market's going to behave out of that news. And I think the tech earnings is irrelevant. I think the big news is the Fed and what the Powell says and does. That I think tech is just noise in the system, and this drop will be the noise. But I do think Powell is the big news event that will drive the market. But you got to do what's best for you. I think if you're hoping for something like this, it's just very unlikely based on just my take on the market, but I can be wrong. The line in the sand, the bull bear line, is actually much lower. It's 453. As long as you're above 453, the market is bullish and buy the dip, and you're not going to have it unravel. You need 453 to break, then you'll have a massive calamity lower. But I do think that's the bull bear line, and until that breaks, even if we do get a very deep wave 2, even if wave 1 does this could be a wick back up. This could be support. We could come penetrate this and wick back up on a weekly or monthly time frame and have a massive hammer candle. So you can't really be uber bearish until that 453 breaks. And really, it's shown no sign of being reached ever again, especially with this massive resistance now flip support. So you've got a lot of tradable pivots. that have to break down technically for the market to even get back to this area. So the bulls are fully in control of this market right now. Whether you want it to be, or you think it deserves to be, or Biden doesn't, or deserve this, or Jay Powell's an idiot, and why is this happening, or the market doesn't shouldn't be trading at these levels because I'm so smart and I play chess. I play the market like chess, and I can outsmart the market, and it shouldn't do this, and it's going to fail because the PE ratio is so high. Like the market doesn't care about that. It's a poker match between market participants and whoever. And if too many people are bearish, the market goes higher. Too many are bullish, the market goes lower. And honestly, I think too many are bearish. And when I watch CNBC and all that smart money on the sidelines, the asset managers are not following this move. They are going to chase it. They are hoping for something that probably won't happen, and they're going to look stupid, and then they'll chase it in these areas that I have here. They'll provide the capital to chase it, and then when that happens, then we're ready for that news event. And that news event will be well known to everybody. Like it will be so well known, we'll all get out. And wouldn't it be if you do ever got like a Texas shooting, situation develop on the border, man, that's pretty well known. It's pretty obvious what you need to do when that happens. You sell the market, right? And that's what, we need an event. Some event will have to happen to cause the market to be so obvious that it's a sell, that every market participant will want to rush for the exits so fast, just like in 2009, where Kramer and everyone screams on TV to get out of the market. That's what's going to have to happen here. So this will be massive news, guys. You won't have to guess, well, is it China sending money, or is it this, or we'll all know. We'll all know. It will be so obvious to everyone. And you'll have time to get out, because a lot of people will be in denial, but you have this 1-2 wave. You always have this 1-2 wave, so you have time to get out of the market. You're not going to get a Great Depression where the market just opens up down here unless nuclear war breaks out. So I think you got this time to get out of the market when it does finally reverse down, and then you could kind of take your chips out of the game on this wave 2, and then just see what happens. That's how I'll trade it. All right, guys, that's